Thank you, Jane, and good morning to everyone. Thank you for having me with you today. What I thought I'd do today is just briefly share a preview of our report on Fintech in MENA that is going to be launched in the coming weeks, and some of the key insights that will come from it. So let me start with the doom and gloom that everyone knows about. Obviously, there's been a huge correction in the public markets in terms of valuations of fintechs globally. And what you see here in the dark blue is the public traded fintechs, and there's been a decline of over 65% from its peak back in mid-2021. Obviously, the privately held fintechs, are less fluid, so it's difficult to say the current valuation levels, but inevitably there has been a correction on the private fintechs as well. And this is a global perspective. However, having said that, the publicly traded fintechs are currently at over $500 billion in market valuation. And, it's still higher than what it was, back in July 2020. So, yes, there's been a big correction driven by the macroeconomic conditions, driven by the consumer sentiment, but this is still a very sizable and large, universe of companies that are making it big. And despite all the doom and gloom, right, that we've seen in the markets over the past years, the outlook is very, very bright globally, and I'll get to MENA shortly. And why is the outlook so positive? First of all, banking globally, according to the McKinsey estimates, is a $6.5 trillion industry. $6.5 trillion. And currently Fintech as a sector is only capturing globally 3% of that. So 3% of $6.5 trillion. It just gives you the sense of how much potential there still is to grow from a base of 3.5% out of the 6.5 trillion. So there's very, very positive outlook moving forward. If we just compare the 3% to other sectors that were disrupted, such as e-commerce, the share of disruptors in commerce, in retail, is currently at 30% globally. So if you just did the math, from 3% to 30%, that is an ample opportunity for growth. And there's a number of, obviously, mega trends that will drive this growth in fintech. First of all is obviously digital adoption. All of you are well aware of that. Obviously, e-commerce, the evolving regulation when it comes to open banking, and all the regulatory support that governments around the world, including here, have given to foster the growth and innovation in this industry. In Europe, our estimates suggest that over 50% of affluent customers are already banking with a fintech. If we look at the mass segment, it's around 30%. So 30% of all customers in Europe are already using a fintech as their banking provider, 50% of affluent. So, the potential is significant. So we are very, very bullish on the future outlook of this sector. If we then take a MENA lens, and this is some of the things that you'll see in our report that will be launched in a few weeks, as I mentioned. This is the snapshot of MENA, right? So banking today is a $151 billion industry, out of which our estimates suggest that fintechs are capturing 1% of that. 1%. So referring back to what I was saying earlier, globally that 1% is 3%. So just getting to global levels is a 3x growth in the current revenue pool that fintechs are capturing. Our estimates suggest that we expect this to grow by 3 to 4x in the coming 3 years. That's a 50% annual growth in revenues that fintechs are capturing year on year. Which would imply that current valuations, and this is majority of fintechs here are privately owned, a 2x of valuation increase in the fintechs that are homegrown. And that would imply that we would have in this region 4 to 6 fintech unicorns in the coming 2 to 3 years, which is by any standard, a great story. And obviously there's a number of factors in our region that are driving this. It's the macroeconomics. It's one of the few regions in the world that is doing so well. And the young population, the digital adoption that we've seen. So globally, despite the doom and gloom, there's a very, very positive outlook. And in our region in particular, that is even more exciting because we're coming from a much less mature state. So the growth rates that we expect are even more exciting. And contrary to common belief, fintech in our region is not just about, startups, right? There's a plethora of different players coming from different industries, different markets that are trying to capture a piece of the pie. Obviously, there's the homegrown fintech startups, and there's already 500 plus in this region alone. There's the international fintechs, 50 plus have already established themselves in a meaningful way in this region. Then there's the incumbent banks that have launched their own digital propositions, digital fintechs. There's many examples in our region. There's VI in Kuwait, there's the Live by Emirates NBD, and others. There's the non-banking financial institutions, the payments companies, the exchange houses that are in their own right disrupting their own industries by moving towards digital services and offering. And finally, there's the super apps or the cross-sector fintechs. And we have eAnd, we have STC Pay, we have Kareem, and we have many other examples in that bucket. So there's 1,000 plus players that are trying to capture a piece of the pie, of a large and fast-growing pie. So it's a very exciting and time to be in this space, in this region in particular. So what are the key unlocks if we look forward? So what are the key unlocks that will allow us to hit those aspirations in terms of growth? We believe there's 4 key things. One is capital. We've seen that many of the fintechs that have started in this part of the world have completed a Series A. Some are starting the Series B. There's a huge need for capital, and it's going to be 5 to 7 billion over the next 3 years. And we've seen international VCs come in. We've seen the sovereign wealth funds getting more excited about this space. So there's ample capital available, and there's definitely a need. Just as a benchmark, the Middle East as a region is, when we compare to Singapore or the UK, if we look at fintech funding as a share of GDP, Singapore is 23 times as a share of non-oil GDP to what the Middle East is. 23x. UK is 20x. So there's a huge need for capital, even when we compare to other markets. The second is obviously talent. There's a lot of people have started their own companies. There's a huge ecosystem of engineers, data scientists, and tech talent that has moving to the region. Definitely there's still scarcity, especially if we look at markets such as Saudi Arabia. So that definitely is an important unlock for this industry to thrive. Regulation, this is critical. There's been a lot of positive momentum over the past years with the Saudi regulators, the UAE regulators, the DIFC, that have enabled the growth of this industry. More to come with the open banking regulation that is coming into play. That will be critical to help all these fintechs to grow and thrive. And finally, partnerships. Historically, many of these fintechs were seen as competitors of banks. Now I think the banking industry in the region is understanding that it's not really about competition. Yes, there's some of that, but there's a huge opportunity for partnerships. So what we see globally is that 85% of banks globally have already established partnerships with fintechs. In the region, that number is only 50%. So only one in every 2 banks in our region in the Middle East has a partnership with a fintech. So we expect that to grow further, and this will also enable the growth of the industry. So I think my time is up. In summary, despite the doom and gloom, we are very bullish on the global outlook of fintech. Regionally, the story is even more exciting, given the starting base we are at. There's obviously a number of key unlocks that will drive that growth moving forward. Thank you very much for your time. Happy to discuss further.